Good morning, everyone. Welcome to the TradeStation Masterclass. Today, we're going to do a technical analysis session highlighting three popular technical indicators in TradeStation: the Keltner channel, Bollinger bands, and the price channel. Maybe not in that order, but we're going to talk about those three technical ideas and some of the strategies that are designed around those concepts. Before we get started, the usual introductions. My name is Jesus Nava. I am the Director of Client Training and Education for TradeStation Securities. For me, it's always a pleasure to talk about TradeStation, and I do appreciate the fact that you guys took time out of your schedules to learn a little bit about the TradeStation platform. The chat is open, so you're welcome to communicate with me any questions you may have about the platform. This is a great opportunity for you to ask those questions. Let's go through some of the disclosures. As a broker, we're required to go through these. Keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation, and that past historical performance is no indication of future results. We are going to take a look at, some strategies and some of the performance results of those strategies. And I just want everyone to be aware that these are not recommendations or even a guarantee that the same thing is going to happen in the future. Online trading is not suitable for everyone, and we should be aware that it should only be done with risk capital. For any additional information on these disclosures, I know that I've talked about this a long time. Just go to www.tradestation.com/important-information if you need a little bit more details. All right, let's go ahead and get started. The first indicator that I'm going to talk about is the price channel, because it's one of the easiest. And if you compare all three, is one of the ones that have the simplest calculations. So let's go ahead and take a look at it. And the reason why we've included these three technical ideas into one presentation is because they're very similar in a sense that they create a channel around the price data. And as a trader, you're going to be looking out for any penetrations of those bands, the upper band and lower band. And the way that you interpret those penetrations, there may be some variations. We're going to talk about some signals and some different ways in which you can interpret those signals, and maybe talk a little bit about how to modify some of those strategies to test those different scenarios. Okay, so let's go ahead and start it with the price channel calculation. Thank you, Rich, for the answer. Yeah, that's correct. The symbol for the micro E-minis is MESM23, exactly like that. I'm not sure we have a continuous contract for that, but thank you, Rich, for providing an answer here. All right, so the calculation: upper band, highest high over a period of 20 bars. And you're going to see a visible line identifying what that highest high is. Now, of course, the 20 bars is something that everyone can modify. So if you're looking for the highest high for a longer period, you can just adjust the number of bars used. The lower band is the lowest low over a period of 20 bars. Reduce the look back for a shorter term and tighter channel, or increase the look back for a longer term and wider channel. Sometimes you may want to look at a particular time period to identify those significant highs and significant lows. Percent P is a calculation only displayed in radar screen. And the percentage is where the closing price is within the channel. If it's at 0%, that means that you're exactly at the lower band. If it's 100%, you are exactly at where the upper band value is. Any negative percentage means that you're below the lower band, and any value higher than 100% means that the prices are above that upper band. So that's the way the percent P calculation is displayed, and we're going to take a look at that in radar screen. The alert is generated when the last traded price breaks the bands. Okay, that's the default alert. And as we have demonstrated in many classes here in the masterclass series is that you can customize that. You can customize the alert. You can customize the way that the values are calculated. These indicators are open to you in easy language, and those modifications are possible and are very interesting to test. So let's go over here to my TradeStation platform and take a look. All right. I have in this example a chart of Walmart on a daily time frame. All right, I'm going to go to studies, add studies, price channel, just like that, price channel, and then just click OK. All right, so as we pointed out in that first PowerPoint slide, by the way, I didn't mention this, but I have a PDF for the PowerPoint information that I'm showing you in class. Manolo is going to be sharing that link right here in the chat for everyone to download if you want to keep it for your records. By the way, Manolo is my colleague. He works for TradeStation, and he's going to be sharing links or any other useful information that you guys may need. Okay, so here's Walmart, and we can clearly see a blue line and a red line displayed on my chart. The blue line, as we pointed out in the PowerPoint, is the highest high for the last 20 bars. If you look at what's happening here with Walmart in the last several days, couple weeks, you can see how the prices have gone up. And the reason why that line is right on top of those candles is because we are getting new highs on that look back period. The default look back period is 20 days. So if I look at this yellow, not yellow, if I look at this cyan value right here, 151.12, 151.12 is the highest high for the last 20 bars. In this case, 20 trading days, which is about 4 weeks, right? So we have 5. Yeah, it's about 4 weeks. So in the past 4 weeks, if we have 5 trading days per week, that's 20 trading days. And for the past 4 weeks, this is the highest high. And the red line, of course, is giving you the lowest low on those 20 trading days, $136.58. So the concept here is that if we have a penetration on the upper or lower band, it means that you're reaching significant highs or significant lows based on this 20 bar look back. Of course, what is significant to you may not be significant to others, and that's the reason why we provide a mechanism for you to adjust the look back period. This is 20 trading days, which if you think about it, it turns out to be 4 weeks of trading. But if you want to look back further back, just double click on the indicator. Let me do that again. Sometimes if you double click on, if you think that you double click on the indicator and you kind of miss it, you're double clicking on the window, but it's clearly visible because the title bar of the dialog says customize window, which is not what I wanted. What I wanted is to customize the indicators. I'm going to try double clicking on that line again, and now it takes me to customize indicator. So always look at the title bar just to confirm that you're in the right dialog. But customize indicator, I can go to the inputs, and here in the length, I can change it. So if I wanted to have more like 6 months of trading activity, I can turn this into a 60 days. And to be more exact, if you think about it, there's about 90 days in 3 months, right? If we take out the weekends and days that there's no trading, you wind up with 22 or 23 days per month. So if I wanted to do like a 90-day or a 90 calendar day type of highest high and lowest low, I have to take into account the number of trading days. So in this case, let me do, if there's 22 or 23 trading days each month, and I want to look back, 3 months, then this would be something like 66. It can be 69 if you want to, calculate 23 trading days per month. Up to you. But this is give us an approximate, look back of 3 months. 66 bars or 66 trading days. I'm going to click OK, and then you can see how the calculation changes. It automatically recalculates, and interesting that in the past 3 months, we're still on the highest high. So 151.12 is still the highest high for this look back period. The low, I'm not sure if it changed, but we are at 136.09, which is 66 days back. Now let's go ahead and take a look at the signal. I'm going to right click on the indicator and go to edit easy language for price channel. Why am I going to edit easy language? Because that's how I find out what alert or what signal is being triggered by the alert. If you go to the alert tab, the only thing you can do there is enable it. But if you want to know what is the condition that triggers the alert, we have to go to the easy language of the price channel. Okay, so now here's the code for the price channel. I'm going to scroll down to a section that is titled alert criteria right here on line 71. Most of the indicators that are supplied with TradeStation follow this easy language structure. So you can easily just scroll towards the bottom. I'm not going to say all the way to the bottom, but you scroll towards the bottom of the code, and we're going to have a section labeled alert criteria that tells you what is the signal being generated on this indicator if you were to turn on the alert. And you can see if the low process under lower band or the high process over upper band. So yeah, a clear breakout. So price activity is within the channel. This is the price channel, and we're looking for that breakout. So going back over here to TradeStation, we know that the current bar is, it's trying to push against that highest high, and it may at some point today or not, penetrate that band. So if we were to turn on that alert, yeah, this one is very close to triggering it. Not on the low side, because the low here is $136. So it would take a dramatic drop in price for you to get a penetration on the bottom band. But that's what the alert criteria is monitoring for you, how the prices will, break the bands. And of course, the penetration on the upper band is considered a bullish signal, and the penetration on the bottom band is considered a bearish signal. Let me go back here to my PowerPoint, because I think we have a list of some of the signals that you can interpret from the price channel. First, a break above the upper band can be interpreted as a market strength and may signal the start of an uptrend. A break below the lower band can be interpreted as market weakness and may signal the start of a downtrend. A move above the upper band indicates overbought conditions and may signal the price will pull back and move in the opposite direction. And a move below the lower band indicates oversold conditions and may signal the price will bounce and move in the opposite direction. Notice that I'm giving you different scenarios here. The top 2 bullet points are what the default alert criteria is built into the indicator, which is if it penetrates the upper band, bullish; if it penetrates the lower band, bearish. But the 2 bottom bullet points here are the opposite. It considers the price channel as a more of a reversing signal. So if it has a penetration on the upper band, you're looking for the price to bounce and go in the opposite direction because the security is overbought. If we look at Walmart, maybe Walmart is not a perfect example of that, because when we had these penetrations a few days ago on the upper band, the security continued to penetrate the upper band for several days. So instead of reversing, it seems like Walmart is still pushing towards that upper band. So again, those scenarios are going to be different for the security you're looking at. So we do need to look at other indicators so that we have a confirming signal. We have a stronger signal. And we always talk about this in our classes, look at several indicators to make sure that they're all aligned and they're all pointing in the same direction. This price channel, I don't know of any other name that this is known by. I know that we have other channels that we're going to take a look at in this class, but this is just a pure price channel. Okay, let's go ahead and do something here, because if you do want to change the alert, let me go back in here into the easy language. Let's say that this is not the alert you're looking for. Let's say that it is the latter that we explained, which is if it's penetrating the upper band, we consider it overbought and we are just expecting the price to go in the opposite direction. You may change this code and say if the low crosses under lower band, and then you can say the alert here, price making new low. The strategy is the one that would have to change. The alert's still the same. Is what happens once the alert is triggered. What action is taken? Are you going to be long? Are you bullish? Are you going to take a short position because you're bearish? That's the decision that needs to happen. So if I go back here to my chart and I add a strategy, let me go ahead and do that because it's interesting that all these three indicators that we're going to talk about, they all have a strategy that is based on the same concept. So you can put that strategy on the chart to see how the idea played out. I'm going to go here to add strategy and take a look at the price channel strategy. All right, price channel. Here it is. Two of them, price channel LE for the long entry and price channel SE for the short entry. I'm going to leave the defaults and I'm going to change my indicator back to 20, which is a default, price channel calculation. And as you can see, the indicator, the strategy is doing exactly what is intended to do. As soon as the price activity penetrates the upper band, we get a blue arrow or a long entry. And when the price channel penetrates the bottom band, then we get a red channel. It's a short entry. Okay, let me go ahead and couple this with stops and targets. I'm going to go here to studies, add strategies, and I'm going to use this strategy that is called, starts with an underscore. So it's underscore stops and targets, this one right here. Okay, and I'm going to say I'm trading Walmart in this case. So this is a per share basis. I'm going to do a profit target amount $5, stop loss amount $1, break even floor amount. Let's do a break even to $1. Okay, and instead of a let's do this right here. Click OK and OK. So this way we have some break even and we have some profit targets and we have some stop losses. Maybe the break even is a little too tight, but let me go back into the strategy settings and change the floor amount to $2. So what this means is that, and I'm using this strategy because I've used it before. So I'm not going into the details of the strategy, but the break-even floor amount means that it needs to reach a $2, right? $2 profit before a break-even gets activated. The stop loss amount here is set to 1. I'm going to increase this to 2, maybe even more, 3. And I'm going to set my profit target to 10, a little bit higher, since I'm on a daily chart. Okay. All right, how did that change the strategy? Let me go here to settings, data, and click on strategy performance report. This is a strategy performance report that goes back 5 years on a daily time frame. Not good. I don't think my stop values are, set to their ideal places. And in fact, this is not a good strategy for this. Sometimes what I do is I come here and instead of, trying to guess what the right amount here would be, sometimes I just optimize these amounts very briefly. And I say 5 to 20. All right, for the stop loss amount, this is going to go from 2, let's do 2 to 10. And for the floor amount, let's go to 10. Okay, it's going to test a different set of parameters. And it's going to pick the one that best suits the strategy. Let's see what it found to be the best. Let me go here into the strategy settings. And as you can see, the profit target amount is 6. The stop loss amount is 7. The return reward ratio, I'm not really a fan of right here. I'm risking $7 to make 6, but it found, that those were the numbers for this strategy. Again, we're not here to find the perfect parameters, but I wanted to get something a little bit nicer on the report. When I go here to the strategy performance report, this is what the strategy is doing. Again, we said it at the beginning. We look at the performance report. We optimized the strategy just a moment ago, which is curve fitting the strategy to data that has already happened. But you can already see that you have a strategy that you can play with and see if the price channel concept is something that you would want to trade going forward, and maybe not trade it by itself, but use it in some sort of combination with a strategy. Okay, let's go ahead and take a look at another indicator. Let me remove this strategy and remove the indicator. I'm going to come over here to my PowerPoint, and let's talk about the Keltner channel calculation. Keltner channel is an old indicator that goes back to the 1960s, and it was designed by a gentleman by the name of Chester Keltner. So yes, the indicator itself takes on the designer's or the creator's name. The indicator was later modified by another professional trader, Linda Raschke, in the 1980s, and she introduced variations to the same concept. The original idea, of course, is Keltner's, and Keltner, back in the day, did not call his indicator the Keltner channel, but is known as the Keltner channel because he was the one who created it. Let's talk about how it's calculated. It combines the moving average calculation, which is an average true range. And I believe the average true range part is the part that Linda Raschke brought in. I believe that when it was first created, Chester Keltner used average range instead of average true range, which is a newer concept. And those are the slight variations that Linda Raschke brought to the indicator. She also played around with the look back period for the moving averages and also the type of average being used. I think she also modified the calculation to use exponential moving averages at certain times. So those are different things that you can keep in the back of your mind, because a lot of these indicators started like that, testing ideas on your chart to see if you would get good signals. And you can always go into the easy language and make those modifications. The Keltner channel that we have on TradeStation uses moving average, not exponential, but it's something you can test, and it uses average true range. You can also modify that calculation. A shift is calculated by multiplying a user-defined factor by the average true range. And this shift amount is added to the moving average to plot the upper band, and is subtracted from the moving average to plot the lower band. All right, so let's go ahead and take a look at that indicator on our charts. I'm going to come here, studies, add studies, and we're going to find it in alphabetical order here in the case called the Keltner channel. Here it is, Keltner channel. I'm going to click OK, and you can see how this, as the price channel, creates some bands. The price channel is a little bit more, uses more straighter lines because it just plots highest high and lowest low. The calculation here shifts bar to bar because we have different numbers being used in the calculation. So let me go ahead and change the style here so that it's a little bit more prominent on the chart. I like to change the thickness of the lines so it's a little bit more visible. Sometimes on presentations, if I don't use these thick lines, it's not as visible. So as the explanation says, this is using ATR and calculating a shift from a moving average. So I'm going to assume that the gray line right here in the middle, not assume because I know it is, the gray line is just the moving average. And the bands, the blue and the red line, are calculated based on the ATR. The nice thing about this Keltner channel is that it's sensitive to price movement and volatility. So as the markets are more volatile, the bands will expand, very similar to what the Bollinger bands do. We're going to get to those in a little moment. But in this case, the difference here is that we're using ATR, how big the bars are getting. For this Walmart, we don't see we see some candles that are pretty big, but there are other securities where that is more significant. And you see how the bigger bars will have an impact on the way that the bands are displayed. They get wider and wider. When the markets are quiet and the bars, or in this case, the candlesticks, tend to get smaller and smaller, that affects the calculation and the bands will squeeze. All right. So let's go ahead and take a look at some signals that this Keltner channel generates. Okay. The signals are, and I believe I'm going to start off with the ones that are default. Breaks on the upper and lower bands. It says here mat, but it should say may indicate oversold and overbought levels. Price may continue in the same direction or reverse. So this is not just one single trade. It's telling you, hey, the price may continue in the direction of the breakout or may reverse from the breakout if the security is oversold or overbought. So in that decision, you always have to look at other studies to make sure that you have aligning indicators. Price rejection at the channel levels may indicate reversal, meaning that if you have a breakout, but all of a sudden the closing price of that candle closes inside the channel, that is considered price rejection. Yes, you did have a breakout, but the closing price is not confirming that breakout is still inside the channel and may indicate reversal. It didn't have the strength that it needed to maintain that level, and it just, did not follow through. You may use multiple studies to confirm the trend direction and possibly trade in the direction of the overall trend. That's something that, it's taught on every basic trading class, that you always have to look at the overall trend and possibly trade in the direction of that overall trend so that your trades, have a better chance of success. Breakouts from a channel squeeze may present interesting trading possibilities. A squeeze occurs when the bands start getting closer to each other, signaling a possible breakout. We talked about this. In this case, the Keltner channel is using ATR, how big the bars are. So if the markets are quiet, it means that the candles are small. So the value that is being calculated is also small. And since the Keltner uses a shift from the moving average, if the values are small, of course, visually, it creates sort of a squeeze. The bands are getting closer to each other. Let's see what the indicator tells us in easy language. I'm going to come here to this indicator and go to edit easy language for Keltner channel. And here again, I'm going to go to the section that says alert criteria. And it says if the price crosses over the upper band, then you get the alert. So this is the type of study that is looking for those breakouts. What you do at the breakouts, of course, depends on your trading strategy and what you think the security is going to do. Now, let me go back here to my trade station, because with the Keltner channel, we also have an accompanying strategy. Let's go here to studies and add strategies. Let's use my keyboard to jump to the case. And here are the two Keltner channel, long entry and short entry. I'm going to click OK and OK. And again, similar to the price channel, when we see a breakout on the upper band, we get a blue arrow or a long entry. And then when there's a break on the short side, we have that red arrow. Now, if I were to leave it as is, let me go here to strategy performance report. This is like a reversal strategy. We're always in the market. It's just flipping you back and forth between a long and a short. And we can see the results here on that strategy. Let me collapse and just look at the summary here. We have a total of 22 trades, which I don't consider to be a good number for back testing. Notice that we are loading 5 years of historical data. So we're going from the year 2018 to 2023. So in 5 years, it only took 22 trades. So that's about 4 or almost 5 trades per year. Now, not a significant number of trades for me to have confidence on the measurements here or the results. So I would have to tweak the strategy to make it trade more frequently, or add other components like a profit target, a stop loss, or a trailing stop to do that, right? Christian's asking, when you add stops and targets with price channels as separate strategies, these are or linkages, don't you need to combine stops and targets into the price channel strategies to ensure that price channel strategies do not perform reversals in addition to the stops and target strategies? That's a great question, Christian, and thank you for that. When you combine strategies components in TradeStation, yeah, there is a little bit of independence between these strategy components. If you want the strategies to be working in unison, you probably need to bring them all into one strategy. But in this case, if I'm adding the Keltner channel, of course, the signals on the Keltner channel, that long entry and the short entry are going to be independent. So whenever the strategy feels that there's a breakout, it's going to enter the market, either long or short, based on the breakout. If you combine this with the strategy that I use, which is stops and targets, yes, there's some independence there and it's kind of separate. But at the same time, that strategy is going to look at the entries that are generated by the Keltner channel and react to those positions. And those targets and stops that you're using, even on a separate strategy component, will monitor those positions and will exit those positions when it has to. So there's no risk in using a stops on targets because that strategy is specifically designed to exit entries or positions that you have already open. The stops and target strategy that I use will not get you into a position. So there's not going to be any contradicting orders. Like, for example, the Keltner channel is not going to go short, and then your stops and targets is not ever going to try to go short again. What it will do, it will only manage that short entry and exit it according to the specifications on stops and targets. Okay, hopefully that clarifies the situation. Even though we're using separate strategy components, they are working together. However, if you want to make a condition of one and the other, let's suppose that you want to use the Keltner channel as a triggering strategy, but at the same time, you wanted to look at the moving average, and say, if the Keltner channel is penetrating, and at the same time, the moving average or, the 50-bar moving average is so and so, whenever you have that additional condition, then you need to put those two strategies together so that the signal is only generated if both conditions are true. Okay, so a little bit of strategy development and strategy building best practices here so that you know how to test your ideas on TradeStation. Okay, so we were talking about signals, and of course the easy language is looking for a penetration on the upper and the lower band. Let me go here to, we already went through the Keltner channel signals, which are very similar to the price channel. You're either thinking that the price will go in the same direction as the breakout, or these breakouts are just signals of overbought and oversold levels, and it'll just reverse and go in the opposite direction. One thing that I didn't show you is how these indicators look in radar screen. Let's go ahead and take a look. I'm going to go here to apps and click on radar screen for a moment, okay? All right, so let's go ahead and add a list of symbols here. I'm going to go here to data, add a symbol list. I'm going to do the NASDAQ 100. All right, here we go. I'm going to add, first, let's do price channel and Keltner channel, see what they look like. P for price channel. Here it is. And let me move that all the way down. And K for the Keltner channel. There we go. All right. All right, so the Keltner channel, there hasn't been a lot of customization on the Keltner channel. You see how it looks very, very different than the price channel. The price channel is color coded. It has this additional column with interesting price location in terms of the channel. This percent P calculation tells you where the closing price is in relationship to that channel. Let me sort by the values on percent P and show you what that means. The lowest value here is 29.4%, which means that well, let me scroll to the top because we have, negative numbers here. So negative numbers, and you can see how the color changes. These negative numbers means that these securities are below that lower channel on a 5-minute chart. Here's a 5-minute chart. Let me do something here. Let me change the symbols to a daily time frame. So this calculates on the daily time frame and see if there's any securities that are on the bottom or breaking out on the bottom side of the channel. Okay, that's calculating my price channel and my Keltner channel. I just got to disconnect. Hopefully, I'm not going to lose connection to the class. My internet has been okay for most of the morning. This is the first time that I see a disconnect. So I'm going to try to connect one more time and see if I'm able to log in. All right, so that worked. All right, so do we have values for everything? Okay, that's slowly coming in. Let me go ahead and double click on %P one more time to see the lowest values. All right, I think that's still filling in. Let's wait until it fills out completely. See what's the lowest value. And while this is filling up, I'm going to remove some of these columns that I don't use, bid, ask, high, and low. Let me remove also net change. All right, and I'm going to put a chart here on the right-hand side. All right, so I'm going to copy it from my other workspace. I'm going to right-click, copy window, then come here to my other workspace, right-click, paste window, so the indicator is in it. Now, the indicator that's going to be in it is the Keltner channel, which is not really what I wanted. I wanted the price channel, which is the one that's color-coded. It's okay. I'm going to put it right on top of this Keltner channel. Studies, add studies. And let me go here to price channel. All right, so we have the price channel, and let me remove the Keltner because I wanted to show you what this value means. So we have this symbol right here at 6%, meaning that it's very close to hitting that bottom channel. This is PDD Holdings. I'm going to click on it, and it shows right here on the chart. You can see how the past few days that security has been coming down. So it's interesting that we use an indicator like this in Radar Screen because you can rank your symbols based on proximity to these bands. Maybe these are securities that you want to watch because they're so close to a price channel. And if that's an idea that you want to test, maybe you want to know other securities that are within proximity. We have one that is, at 11%, which is Data Dog, and you can see how close it is to the bottom band. If I were to sort again by %P, now I get some values that are above 100%. Notice how the color is also changing. We have yellow, but these 107% tells me that I'm on the other side of the upper band. Remember that the channel is from 0 to 100. Anything that is inside the channel is going to be from 0 to 100. Outside the channel is going to be either above 100 or below 0, a negative number. So if I take a look at a line tag right here, you can see how the current bar is breaking that top band by 107%. So it also tells you the magnitude of the break. O'Reilly here also breakout on that upper band. So great scan for you to look at securities that are approaching, that breakout. We don't have that calculation here on the Keltner channel, but we can create it. If you wanted to add a %P sort of calculation to the Keltner channel and see where the close is or the closing price in relationship to the width of that channel, just look at the easy language of the price channel. They go here to studies and edit easy language for price channel and look at the %P calculation. Let's see what happened here. Okay. It's just that my easy language was not responding and I think it just froze. So let's give it a second to see if it comes back to us. And at this time, let's see, let's go over here because the next band indicator that we were going to look at is the Bollinger band. So is TradeStation trade station seems to be okay. It just seems like the development environment may have stopped responding. Let me go ahead and close out of the development environment. I'm going to try opening that indicator one more time. All right, so I'm going to go right click on price channel, studies, edit easy language for price channel. It opens up the development environment, and here we go. So the percent P calculation, well, it uses percent P right here, and it tells, here's the calculation. Percent P equals the closed minus the lower band divided by the upper band minus the lower band. If you use this formula and then create another plot, you can pretty much add that same calculation to any indicator that creates a band or bands around the candlesticks. So yes, the Keltner channel is not one of those studies that has that. In fact, it hasn't been modified for radar screen. You just see the upper band, lower band, and midline. So yeah, for radar screen, I would bring in calculations like the percent P because it gives you more useful data than just, what the straight values are. Let's go here and talk a little bit about Bollinger Bands. So let me go here to my PowerPoint. Bollinger Bands, created by John Bollinger. John Bollinger still a great trader and educator. You can search him and find him. He created, of course, the Bollinger Bands, and they're used to identify overbought and oversold areas. There's a middle line, which is a moving average set to 20 bar by default, but you can change that. And it uses standard deviations, and it's going to add 2 standard deviations to the top and subtract 2 standard deviations to create that bottom band. Standard deviation measures how far trading prices are from the average and pretty much allows you to identify those extremes. Let's go here to TradeStation and look at the Bollinger Bands. Let me go ahead and remove the Keltner channel. Or by the way, one thing that I didn't show you here in Keltner channel, let me go back in there, because I wanted to show you that in the calculation of the Keltner channel, you can go into the inputs and decide, what factor to use in the number of ATRs. This is the length for the middle line for the average, and the number of ATRs is 1.5. So in the calculation of the Keltner channel, the ATR, the average true range, is going to be multiplied by this factor, number of ATRs. And this determines, how far away those bands are going to be. If I use, 3 ATRs instead of 1.5, you can see how the bands are going to expand a little bit more. And very rarely you see a breakout. So that factor does have a direct impact on the calculation of the Keltner channel by giving you wider channels and more sporadic breakouts. So let me set it back to 1.5. And because this is also true for the Bollinger Band and the price channel, you can change and adjust the sensitivity and how frequently the price bars will react to those lines. All right, let's go ahead and take a look at the Bollinger Bands. Let me remove the strategy. We have the indicator, and we also have the strategy for the Bollinger Band. Studies, add studies. Bollinger Bands right here. All right, you can see that all of these look very similar, but the lines do change accordingly based on the calculation. Price channel, straight, prices, highest high, lowest low. Keltner channel uses average true range. And in this case, Bollinger Bands uses standard deviations. The blue line, 2 standard deviations above, red line, 2 standard deviations below, which means that the majority of the prices are going to be inside of those 2 bands. In fact, 95% of the prices are going to be within the bands. So you can already tell that anything that is outside the bands are extremes. If you look at a curve bell of the standard deviations, we are at the extremes here that very little data exists. So yeah, those penetrations are outside of the 2 standard deviations, and those are extreme. So in the Bollinger Band, whenever you reach these extremes, yeah, the security may stay in that extreme state for several candles, several days, several minutes, depending on how what time frame you're using in the chart. But when it returns from that extreme, that's when the Bollinger Band generates the signal. If I right click here on my Bollinger Bands and I go to Edit Easy Language, I'm going to go and take a look at the alert criteria. So I'm going to scroll down, and here it is. Line 88 is alert criteria. Test price L band crosses over lower band. This test price L band, if I look at the very top, test price L band is the close, and test price U band is the close. So we're using the closing price here. So in the alert criteria, whenever I see the test price L band, I'm just saying the close. If the close crosses over the lower band. Now take a look at this, because for it to cross over the lower band, it needs to be below the lower band. So that's a cross over the lower band. So in this particular case, the security must have been at this extreme first and then returns inside the channel. That's what the Bollinger Band alerts you on whenever that happens, whenever it returns inside the channel, because now it says, oh, it was oversold at one point, but now it's returning from an oversold condition. So it may continue to go up now. So that's a bullish signal. So let me go back here to my PowerPoint because I have some information on some signals. Bullish price breaks below the lower band, exactly what we were talking about, and then breaks above it. So that, return inside the channel, that's your bullish signal. And the bearish is the opposite. When we have a break above the upper band, and then it breaks below it again and returns inside the channel. So that's one of the things that we look at in the Bollinger Band. That's the default criteria, and we use other confirming studies for stronger signals. We can also look at the Bollinger Band squeeze. I do a separate presentation on the squeeze because I find that to be a very interesting idea of the Bollinger Band. Well, at least not very visible on TradeStation. So we're going to take a look at the Bollinger Band squeeze the next time we are going to, or we are doing the technical analysis session right here in the masterclass. Right here, the last bullet point says you may use pullbacks towards the 20-bar moving average to identify signals in direction of the overall trend. This is an interesting way of looking at the Bollinger Band, and what that means is that if the overall trend is an uptrend, like for example right here, and all of a sudden the price activity pulls back into the 20-bar moving average like it did here, you notice how this candle kind of penetrated that middle band. A lot of traders use that as a signal to go in the same direction of the trend because they consider this just a correction or a pullback, and it's going to go back. It's going to bounce and go in the same direction of the overall trend. So that's exactly what that last bullet point means. Now, we don't have a strategy that follows that concept that we just talked about, because the strategy is based on the original concept of the Bollinger Band, which is whenever you've reached these extremes and the strategy returns inside of it. So if I go here to studies, add strategy, and I use the Bollinger Band strategy, you're going to see that on these upper breakouts, we have a short entry. And on the lower breakouts, we have a long entry. It's like an inverse strategy. It's reached an extreme, and we're betting that the price will go in the opposite direction. How did the strategy do on this, particular strategy component? This is Walmart, 5 years. Not many trades on those 5 years, but still is a profitable strategy. Again, it needs a lot of work, but you can already see that by just putting a strategy on the chart, you can automatically pull up a strategy performance report for evaluation. What else can we say here? If I go into the strategy settings, let me right click on one of the arrows and go to edit easy language for strategy. Let me show you this long entry, for example. So it says, if the test price L band crosses over the lower band, again, we are at the bottom, below the lower band, and it crosses over the lower band, then it's going to buy. That's your bullish signal. Now, of course, this condition can be modified, and you can pretty much use any of the signals that we have on the strategy and make it do something different. Of course, it requires you to come here and modify the easy language code. What I would do is probably save this as a different document with a different name, so that it would be my modified version of the strategy, and I still have the original document. So whenever you want to make changes to the easy language, we always suggest that you do it on a copy. And you do a copy by just going to File and Save As, and save the document under a different name. So that's our presentation. We talked about 3 different channel type studies: the price channel, which just uses the highest high and lowest low of a look back period. We used the Keltner channel, which uses ATR in its calculation, and it's sensitive to how big the range is in the candlesticks. And a third, we use the Bollinger Bands, which uses standard deviations and plots 2 standard deviations above and below, which can also be adjusted. I didn't show you this, but if you want to have or additional lines based on other standard deviations, let's say, for example, you want to see the 1 standard deviation, what I recommend you guys do is probably add the study a second time. So I can add the Bollinger Bands another time, and I can change the style of the second one. I can go to Style here, make the upper band a dotted line and the lower band a dotted line. I can go to my inputs and make these 1 standard deviation, -1 standard deviation for the down, and there we go. So now, if you look at my indicator, I have additional standard deviations that can also be used in a more elaborate strategy. So for example, you can say, if it crosses, the 1 standard deviation, but it doesn't quite penetrate, the 2 standard deviations, then take this other action. Now, if we are on the outer bands, if we are at the 2 standard deviations and there's a return inside the channel, we may take a trade, but only until it crosses the 1 standard deviation or the midline, or even the 1 standard deviation on the other or the opposite side. So there's a lot of different things you can do to a strategy based on a simple concept, and you can introduce other ideas at different levels. And this is something you can do with all the different studies that we used. I mean, this multiple lines, I used, in this case, I used standard deviations 2 and 1. But if you're using the Keltner channel, then you can use a 1.5 factor, and then another Keltner channel on the same chart on top of the Keltner channel using a 3-time factor. And you can see the multiple lines on the chart. For the price channel, same concept. You can have a 20 bar, which is your 4-week, maybe set another one to 66, and you can change the color, change the style, which line is which. And that way you can have multiple signals generated at the same time. All right. That's my presentation for today. Hopefully the indicators are simple to use. And if you have any questions, or if you'd like to customize, or if you get stuck, modifying any of these studies, please let me know. The idea of doing these classes is to help you guys to modify your TradeStation the way you want to trade it. Thank you so much for your time. Have a wonderful afternoon, and I hope to see you in my future class. Goodbye, everyone.